Good morning. It is Thursday, October 27th. We've got some pretty big price action going on this morning with equities and the US dollar. Last night, or this morning actually, Europe, we had news come out of Europe. More or less, the European leaders persuaded the bondholders of Greek debt to take a 50% loss, and they're trying to recoup more or less or save themselves about $1.4 trillion in their whole financial crisis going on over there. And that's really put a big chunk, taken a big chunk out of the US dollar this morning. And the breakdown in the US dollar has triggered a buying wave in the equities market. So we have a pretty key level. If we just look at this dollar chart, we have the support zone here. More or less, we had a falling wedge on the US dollar index, and we were starting to come up, test the upper resistance band yesterday. And it touched it, ended up selling down, but this morning we got the news out of Europe, and of course it sent the dollar tumbling quite a bit further down, and this, of course, a falling dollar triggers buying in the equities market. So this 76 level was a pretty key one. It's broken, and now we'll have to see what's going to unfold going forward here, but overall it has triggered a big wave up in equities this morning, which I'll show you in just a moment. If we just zoom in on the shorter term time frame, just go to the 60-minute chart, you can just see the breakdown this morning of the 76 level. This is a key zone that was actually broken, and now we've just gone into full out sell mode, and the market just continues to grind down the US dollar index. So eventually it will have some type of bounce, and I wouldn't be surprised if we see maybe a bounce today or so, but overall, I think it's breaking down, and it could be triggering the next rally in the equities market. So taking a quick look at futures this morning to give you an idea for what's taken place. I'll just show you yesterday's close. This was yesterday's close right here. And so this is the SP 500 futures. So we are up 10, 20, almost 30 points. So we're up about 2.75% this morning. Huge move in pre-market trading to the upside. We broke to a new high, and there's been, considering it's pre-market, there's been a steady climb in volume supporting this move. So it looks as though this more or less three-wave pullback we had yesterday, it looked as though we were going to go lower, and it consolidated for a bit, but then we got the news out of we got rumored that the US and China were thinking about printing more. China was looking to work on using the International Monetary Fund to help reduce its debt, help protect itself for the European central banks. And of course, if China and the US start printing, then we're going to get inflation and see the US dollar fall even more, and we'll see equities go back into another strong bull market. So let's just step back and take a look at what's going on in crude oil commodities. So we had a fall in the dollar, which is helping lift oil just a little bit today. It hasn't really affected commodities too much. Believe it or not, it's more of a dollar index and equities kind of move. It's really hasn't kind of bled over into precious metals or anything yet. But here we've got a little bounce in crude oil this morning. Nothing too serious. I'm actually liking crude oil more and more now that we've had this pullback. More or less, we had a wave up, almost like a little bit of a running correction, and then we got this breakout, and now we're forming this kind of little bull flag. So the fact that we did get this breakout here, we had a bull flag kind of test here, it's starting to look more and more bullish in my opinion that we could see crude oil make a push, another move up to around the 98, 99 level. So I am liking that, looking for a potential setup there. As for gold and silver, here's the gold chart, 4-hour chart of gold. Overall, if we just zoom into yesterday we had a nice move up in price, kind of traded sideways yesterday. Overall, it's made a little bit of a new high this morning, but overall it hasn't really had a big surge. What they're doing in Europe there isn't really all that inflationary yet. But if you get the US and China doing some stimulus measures, then we're probably going to see gold and silver, gold for sure, take off again, and the US dollar will continue to fall. So we're going to keep our eye on that, but surprisingly enough, gold really hasn't budged on this move. It's more like some front running in anticipation of some type of news, and now it's not really doing anything now that we've got some decision out of Europe. Silver is pretty much in the same boat. It is trading sideways the past two sessions, forming a little bit of maybe a little handle here. Resistance is trying to eat through this previous high, and we may end up seeing it pop. Silver is a little more volatile than gold, and it's easier for it to just kind of make these random kind of pops and moves. You can see here, you'll see these sharp drops, and they usually reverse right away, but we'll see what happens going forward. But I am, now that we kind of know what's unfolding in Europe, we may have to just kind of jump into a couple positions, and because the market could just kind of run away without any real pullbacks. So we may just have to kind of jump into a position, a small position, and if we do get a pullback, we add. If not, then we're at least in the market for a potential run. So I'm going to be looking for some setups today and tomorrow, or whenever they unfold, possibly early next week. Excuse me. Now looking at bonds, I pulled the futures bond contract up this morning. You can see it looks pretty much the same as the TLT fund I show you. More or less, we've been getting this sideways consolidation, and we're seeing bonds pull back this morning simply because money is piling into stocks, and also the fact that some bondholders in Greek bondholders are taking 50% loss. It may have a little bit of fear in the bondholders. If it happened in Greece, it could happen over here, but highly unlikely. But overall, bonds are pulling back a little bit this morning with some rising volume. So it's something notable. I'm keeping my eye open for this position. We may see a breakdown in bonds here. We may be looking for a short play because we've got a nice clean support zone, and also if the equities market goes into full out another bull market, then we're going to see money pour out of bonds, and they're going to go into stocks, so bond prices should fall. Now, just taking a quick look at the SP 500 ETF, you can see we've had this extended move to the upside, and I've been pointing out that we've been getting into this kind of running correction where volatility picks up, and instead of flagging down or going sideways, we see prices continue to move higher, but with the widening price action, it's actually almost correcting itself. It's shaking out traders on each move. So that's kind of where we stand. Now, if we pull up the regular trading, or the futures trading hours here, we'll just pull up 24-hour clock. You can see where the SP 500 is trading. I'll just zoom out a little more so you can see that full picture again. You can see where we're trading this morning. Huge gap up, gap and go more or less. It just gapped and continued to run this morning. So we're trading up fairly sharply. Overall, we are trading up at a more or less upper band, and we've got this lower kind of support zone in here. So we've got this huge gap in place. We're extended. I really don't want to jump into the long side here. There is a possibility that we see the market just continue to run away, but overall there's a lot of downside potential simply because we're overbought. We're going to be up 2-3% this morning, and usually when the market's up that much, you'll usually see it either trade sideways for a bit or pull back. And not only that, but we've got a massive gap window, and usually gaps get filled. It may not get filled for a couple days, but we could see a sharp pullback in 3 or 5 days, and eventually it'll come over here, and this lower band is still way down here, so it could come down, fill that gap eventually in next week or so, and then continue to work higher. So got to be cautious with that, and just it goes to show, if you jump in now, you do carry quite a bit of risk, because you not only have an overbought market and you're trading at resistance, but you also have a huge gap that is most likely to be filled. So anyways, that's it for this morning, and I'll update as the kind of day unfolds, but I'm going to be starting looking for some trading positions. Don't get too all antsy because the market's up huge today. Remember, there's always an opportunity in the market just around the corner, and you don't need to be taking positions that I think are overbought at resistance with a high probability of pulling back in the next few trading sessions. Usually everybody I think right now is piling into the market, and that's what's causing this huge surge, but it will calm down and most likely have some type of pause or pullback where we can get in when there isn't as much potential for it to whipsaw us out of a position if it drops sharply. That's it for now, and I'll talk to you later. Bye bye.